All right, let's talk about Dixon Tech. It's another stock in focus on account of a strong Q2 with revenue up more than 29%. We're going to speak with the management to talk about the quarter gone by and the path ahead in the second half. But before we do, let's bring in Puneet to tell you about the things that worked in the second quarter and what the trends are possibly heading into the third and the second half. Puneet, over to you.
Well, thank you for that. It's been a strong quarter, as you rightly said, but there are some key aspects and multiple in terms of Dixon to talk about. Revenue as well as EBITDA was up 29 and 31% respectively. Profit also showed a strong growth, but there have been some key aspects that multiple EMS companies have now gotten an approval under the new ECMS schemes for certain projects, while Dixon is still awaited on that. So that'll be the first key thing I'll be watching out from this conversation. The other one has been that the EMS players are facing increased competition from Chinese EMS players who have been working with companies like Vivo, Oppo, amongst others. So what has been the market share of Dixon in terms of the overall EMS production space will be the other couple of aspects I'll be watching out for, and what's the outlook going forward. And third, as well as the most important, is the JV with which Dixon has with multiple companies such as Vivo and Longcheer. What has been the approval process? Has the government approved them? Because that is something that we are still waiting on by. So while there has been in the industry a revigoring of under the new ECMS scheme, Dixon has largely been absent. These will be the three key aspects from this conversation, amongst others. But quarter two was a strong performance by the company, but the future is something that we want to talk about, and these three things is what I'll be focusing on.
All right. Thanks a lot for that, Puneet. And let's get in Saurabh Gupta, Director of Finance and Group CFO, Dixon Technologies, Johnson, right now on the show. And Saurabh, you wear many hats at Dixon, so excuse me if I got one of those designations wrong. But thank you so much for joining in today.
Yeah, good morning, Neeraj. No, thank you. You got it right, absolutely.
Perfect,
thank you so much.
Yeah. Okay, great. So, Saurabh, two or three things, and maybe we can start off, or maybe we can come to the Q2 results in a bit. But I think Puneet highlighted one or two key points, which I wanted to get your thoughts from. And because you are a giant, you're the biggest player out there in that space, would love to understand from you, how does this whole piece of rising competition in two ways, right? With multiple companies, multiple EMS companies getting approvals for key areas, which you guys have been the leaders of, and the fact that Chinese competition in the EMS space is also picking up. There were a couple of notes which were saying that the aggregate Chinese market share in the EMS space in India has gone up over the last 12 to 24 months. How does this, or what does this mean for a large dominant player like you in terms of market share, in terms of margins, and in terms of future growth opportunities?
Yeah, Neeraj, so my sense is competitive intensity has gone up, but we continue to be the leader across the various EMS players in India. We continue to have the largest share or the lion's share of all the large brands. And I think so over the last couple of years, we have been able to stitch some good partnerships, like partnership with Longcheer, which is a large ODM. So once that JV is operational in the next 4 to 5 months from April onwards next financial year, I think so we will be able to pull in more volumes in that JV. Also, we feel that our relationship with another anchor customer of ours is going strong. So our volumes have not come down with that particular anchor customer. It's just that anchor customer has diversified and has added one more EMS player. But we continue to gain the volumes, and we'll continue to gain a larger share of export volumes for that anchor customer. So we are pretty much confident about our order book of 65 million for next financial year. And the addressable opportunity is, of course, 100 odd million on the outsourcing side. So yes, there will be some more EMS players which will be having some market share, but we will have the largest portion of the market share. And gradually with all these brands and also these ODM partners, we feel that our export volumes will continue to go up.
So Saurabh, again, no doubts around that, right? Just the size that you guys have, you will have the largest market share. Is the incremental bagging of newer orders, in that would your dominance in terms of the percentages come off a little bit, if at all, part one? And part two, could it have an impact on your pricing, your margins, let's say over a 5-year period?
Yeah, so one, I think so we are working on the margin expansion, Neeraj. One, that will happen largely on account of the backward integration strategy. So our foray into displays, camera module acquisition that we just recently did, our foray into mechanicals, lithium-ion batteries, I think so will be all lead to a decent margin expansion. So that is what we are gunning for. And also, we feel that across all the EMS players, we have the largest capacities. We have very deep relationships, and also there's huge focus on driving more efficiencies across the various plants that we have on account of more investment in team, in digitization, in training and development of our people. And we feel that not only the margins will expand over the next couple of years, largely on account of this backward integration strategy, we feel that incrementally we will be able to take some large export volumes, so which we are working on with some of our anchor customers. So we feel pretty much confident about the growth outlook in this. And also we realize that yes, there is competitive intensity. So yes, the other verticals for us, IT, hardware, telecom, will also continue to show a large growth. We are looking for some more growth opportunities. We are evaluating some acquisitions. So clearly, we'll be working on some more growth opportunities as well.
Hi, good morning. Tamanna here. You've spoken about the export volume increasing and how you expect that to come in. Any guidance that you've penciled in or any outlook that you've penciled in terms of numbers?
Yeah, so Tamanna, last year that number was $150 million for us, broadly 1,600, 1,700 odd crores. Already this financial year, we're looking at a number of closer to 7 to 8,000 odd crores. And yes, we are looking for a significant growth in next year numbers as well. So we are clearly working with our anchor customers to grow that piece. And we feel that that export as a percentage of revenues and also in terms of absolute volumes will continue to go up for us.
Another factor for the company, and which has also had a lot of interest from the markets in that sense, is all of these joint ventures with Chinese players that were announced, Saurabh, and I think government or nods are awaited for some of them. Anything on that status that you can share with us? Have those permissions come through? At what stage are those permissions and those joint ventures, are they underway?
Yeah, so two of our JVs, one with HKC on the display side and one with Vivo on smartphone manufacturing, is progressing well with the government. It's advancing very well with the government. And we feel confident that we should get those approvals soon. And we are looking to, once we get the approvals, then next 45 days would be to close all the other conditions that we have laid down in the JVs agreements. And then hopefully we should start, especially in case of Vivo, we should start some consolidation of those numbers from Q4. So this is what we are targeting for. So a large part of our growth also in mobiles would happen on account of that JV.
When you say the approval process is going well, can you elaborate? What does that exactly mean? And when you say you hope for it soon, is there a timeline in place? Or is it all unclear right now?
Yeah, so Tamanna, there's a lot of back and forth between the various governments and us on the queries has been answered, and we understand that final set of queries have now been addressed. So basically it's an interministerial meeting which happens, and government calls for that. So my sense is we are pretty much in the last leg of that, and hopefully we are expecting. Of course, very difficult to give exact timeline. Yeah, we are expecting it very soon in the next couple of weeks or maybe a month or so.
Okay. Does this lend itself further, Saurabh, good morning, this is Alex here, just to drive home that point that you were talking about on export volumes, right? You've said that you expect that to materially grow, all of these joint ventures and the capacities that you set up. I'm wondering what kind of volume mix will emerge, say in FY28 or heading towards FY30, because seemingly, and correct me if I'm wrong in my interpretation, there is increased competition in India, so you're looking increasingly to other markets to have partnerships and sell your product, and so there could be a material shift in the volumes that you produce.
Very difficult to quantify an exact number, but clearly with some of our anchor customers, we are looking to grow that volume significantly. So that business case is being worked out. We'll have a better visibility in the next, I think so, couple of quarters for that. But my sense is India will continue to grow. And I'm assuming that Indian market will also continue to grow. There's still a large penetration of smartphones which need to happen. And we being the largest player would be the biggest beneficiary of that. Exports, yes, as a percentage and absolute number, it will continue to grow. Very difficult to quantify, but we feel confident that we have put all the building blocks as far as the smartphone manufacturing is concerned in terms of the backward integration, a team, the better infrastructure, partnerships, and a lot of work is going on the other aspects of industrial engineering and other parameters, which will make us more and more competitive in the export markets.
be right to say that the margin profile for your export business is better than the domestic business? The reason I ask is that while you are by far and away the largest player, you're at 53% market share, correct me if I'm wrong, in the second quarter, and that's dropped from 64% year on year. So there is obviously that pressure. And so to defend your margins, one would think that a higher export share would be a boon.
Yeah, so exports would definitely help it, because if you are manufacturing both export and domestic volumes in the same facility, it leads to operating leverage, so which will always have a positive impact on the margins, along with a backward integration play. So yes, I'll not say that exports would have a better realizations or margins. Pretty much yes, but definitely if you have more volumes in the same facility, that definitely helps on the operating leverage side, and that has an impact on the margins.
Saurabh, because we didn't get a chance to talk post your numbers, and I was looking at some of the con-call commentary as well, right? That aspirational or the target 1 lakh crore revenue that you guys have spoken about, is that by FY28 or 29? Just for my clarity, because I think the growth rates, CAGR number changes materially depending on the year target.
Yeah, so that should be achievable in 27, 28. 26, 27, we are looking at a revenues closer to 80,000 odd crores. And from there onwards, we feel that growing at, of course, we are evaluating lot more opportunities now. But I am assuming that even if growing at around 30-35% should not be a problem. So that we should be able to achieve those numbers in 27, 28.
Got it. So, I mean, if you do it in FY28, that's about a 37% CAGR from FY25, which is commendable. And at the same time, I believe you've said that you could reach from a current 3.8% margin to nearly 4.5% margin, and that at that scale, right? By FY28.
Yeah, so we feel that all these activities of operating leverage, backward integration, there can be 100 bips margin expansion, slightly 100 bips more also.
Wow.
Margin expansion, but that will largely reflect in 27, 28 when all the backward integration play for us gets ramped up and stabilized.
Yeah, Saurabh, I hear you. Sorry, but I'm coming in because the essence of my question was that if you do 1 lakh crores in FY28 and if you do 4.5% margin and the cash flows and the ROCs that you enjoy, would it be safe to assume that for all the things that you're trying to do, you may not need any material equity fundraise, even with the plans that you have?
Yeah, so Neeraj, we feel that we are at that stage where all the capex can be completely funded from internal accruals. Our balance sheet is in good shape. There's hardly any debt on the books. But yes, yeah, we are evaluating more opportunities. We feel that if the larger opportunities come beyond my balance sheet maintenance of debt to equity or the internal accruals or the earnings visibility, then we might come. But otherwise, we feel confident that so far that it will be completely done from the internal accruals. Yeah.
Well, the stock is trading at the high point of the day. The market seems to be digesting some of the things that Saurabh has just spoken about. Saurabh Gupta, thank you so much for joining in today and giving us your thoughts. Really appreciate your time this morning.